Hi, everyone. It's now 35 past, so we were just giving everybody 5 minutes to join the webinar. So my name is Radhika Bhachu. I'm the CEO and co-founder of Dovu. And today we're bringing this webinar to help healthcare practitioners learn more about financial planning. So thank you for joining us. I'm also have been joined by Robert Ochieng from Abojani Investments. Robert, I would like you to introduce yourself.
Thank you very much, Radhika and Dovu, for having us on board. So my name is Robert Ochieng. I'm the CEO and co-founder of Abojani Investment, and we help individuals to learn about financial markets and the instruments that are available for them, so that then they can use these instruments to invest, and hopefully they can live fulfilled lives. So we are here to support you and take you through the presentation today, and we hope that you'll find as much value as you can today. Thank you.
Brilliant. Great. No, thank you so much. So we're really excited to have Robert here. He is helping us on our journey of financial education, which is super important. And today we're really very much going to talk about what does it mean to have a financial plan? Like everything in life, it's good to plan and make a plan and work towards it so you can achieve your financial goals. We're going to walk through some rules of thumb that can help you in your day-to-day lives, help you achieve the plan that you set for yourself, and then really talk about why nowadays it's important not just to save, but actually invest, because savings isn't enough. And then we'll give you some examples of what that means in actual monetary terms, and we'll do an introduction to Dovu, and then the healthcare fund, and then a Q&A. So a little bit about us. So Dovu is regulated by the Capital Markets Authority, and our vision really is to provide the everyday Kenyan with access to financial markets, both local and global. And what we've done from our research of when setting up the company was understanding that people firstly don't know how to get started. So when you come onto the platform, we provide you digital advice. People lacked access to global markets. So nowadays you can, before it was very cumbersome, now we give you access to actually be part of the global market that we consume every single day. You know, we have laptops, iPhones that are global, but before we didn't have the opportunity to access the market as a retail investor. I'll let Abojani actually introduce yourself. Robert, go ahead. I'd love for you to.
Yeah, so thank you, Radhika. So Abojani helps individuals to get the much needed financial education. So this is something that is not in our education curriculum, and actually it is possible for someone to learn and do very sophisticated things such as being a pilot, being a medic, being an IT guru, without having known much about financial markets and where to put their money. So that's where we come in, so that with that education, then you can be able to make informed decisions. Then you're able to connect with regulated financial markets players such as Dovu, licensed by CMA, so that then you can put your investment in safe places. And if you're able to do that consistently, you're likely to be successful as an investor. So we have very many people in our investment community that we help with this information, and we give people timeless information, since we know that entrepreneurs and professionals, they're busy people. So because of that, we give you things that will matter 5 years from now. Thank you. So I'll start by taking us through our personal finance framework. And this is a discussion that we usually have when we meet investors, individuals in the Kenyan and East African setup. So we have a Facebook page that currently has 86,000 people, and people ask a lot of questions there. So over time, since 2015, we came to realize that those questions, they tend to fall under these three main categories. So what we call Abojani personal finance pillars, we are looking at the mindset, skill set, and tool set. And we believe that if you have these three skills, then you're likely to be successful as an investor. So the mindset, first of all, is to know that personal finance is personal. So it's all about you and your money, what you worked for, and therefore you have to see what money means to you. So that is a very personal question. And I would like to ask all of you, if you can please type on the chat, what does money mean to you, if I were to ask you that question? Because that is very, very important, since money means different things to different people. And once you're able to answer that question, then you'll be able to make the connection that you need to set aside part of your money. So it could be to achieve financial freedom. It could be to be able to go for a holiday in December. Whatever it is, that is very, very important. So it could be freedom. It could mean that you can do what you like. You can hang out with the people that you love or support your family. It's very, very important that you write down that. And the first step is to have a meeting with yourself and be true to yourself and write down those things that you need to do. Then once you have that, there's the aspect of just understanding that life has got cycles. So maybe there'll be a time where you're young, you could decide to have a family or not. All those things that happen in life, we need to make a connection so that when you're going to financial markets, we'll know that I'm going to invest because I need this. So for example, there are those personal goals that are unique to us, but there are things that will affect all of us. So for example, an emergency, it comes from nowhere and you need money to sort it out. So probably you lost your phone and you just need 5,000 Kenya shillings to replace that phone. That tends to affect many people. And retirement. Now that you are young, we're able to even know how to click on a Zoom link and join a meeting. We don't know. Maybe as medics, you can tell us, but probably when you're age 75 or 80, you will not be able to do some of these things, or age 60. Because of that, retirement again is key and it affects all of us. And there's living within your means. So it is said that if you use your money to please yourself, you are likely to live a more fulfilled life than those who are using their money to please other people. It is close to impossible to actually please other people on a consistent basis. Comedians will tell you that sometimes they crack the jokes and no one laughs. And even musicians, people, after you've worked so hard, people say, I don't like that music. So because of that, the best person to please with your money is you. So the mindset is powerful and it sets us in motion to start our financial journey. And it's a very, very personal journey. So the other thing is that the mindset is good, but it is not enough, because the financial instrument that you are using, we are probably going to get them in an ecosystem. So because of that, you need the skill set so that you can know what is good, what is right, and you can even know how to do your due diligence. And that's where the skill set layer comes in, and part of why we are here today, to learn and see the options that are there so that you can make that connection with our personal investment. So the skill set, it goes to financial markets. What is CBK? What is the National Treasury? What is CMA? What is NDOV? What is Abojani? Very, very important for you to understand that. And even just knowing some money skills or elements that would affect your life, like inflation. What does it mean? So for example, when you say that inflation today, CBK has released, Kenya National Bureau of Statistics, they've released the numbers for June and it stood at 7.9%. So that simply means that if you have money in investment vehicles that in the long run are not going to give you 7.9%, it simply means that you're actually losing money when you just have it sit around. So I usually use a good example of a loaf of bread. So in the year 2004, it was going at only about 20 Kenya shillings. And as we speak now, I think it is at 55 or 60 there. So because of that, you can see that if you just had a 20 Kenya shillings and you didn't put it in an investment that is giving you returns above the inflation, you would have lost your purchasing power. So we would say that you are too poor to even afford a loaf of bread. But if you had invested it somewhere, probably it would be 80 or 90, and you could even buy 1.5. So that is part of skill set, knowing that now when I'm going to invest, these are the expectations that I have. And again, knowing the upper side. So if you find that the returns are a bit high, like 20%, 30%, you should question it, because if someone has an investment that with such type of guarantees, maybe they'll get loans from people with more capital, banks, and the rest. So because of that, again, we need to know we need to play in between there. So that's the area of safety. So skill set is something that you develop over time. Since financial markets are dynamic, they're very dynamic and no one knows it all. So it's just important that you know how to go about it. And it's a lifelong journey to continuously increase your investment IQ. So that is key. And just knowing that this is what's available in the stock market or what's available in financial markets, and this is how it is going to help me. Is it an insurance product? Is it an investment product? Why am I investing? Probably you're investing because you have future goals. You need 1 million, 2 million, or 500,000 as a down payment to buy a house 3 years from now. Because of that, you're investing. So that connection is key, since now you'll be self-driven. It is your life journey, and it will be effortless because you can actually say that this is why I'm doing it. So that is very, very key. And the skill set layer, if you don't have skills, you'll end up being driven by other people. So you need to be self-driven. So relatives or people who want to take advantage of your money, if they know that you have certain disposable income, like they have an idea what medics earn, or even pilots or IT people, so they're likely to take advantage of that, and you'll be working so hard, but they'll always have reasons to use your money. So because of that, the skill set layer is key for you to stay guarded. So the first level again for skill set is to realize that you need to play defensive from the word go. Then finally, after all is said and done, there's no reward in financial markets for knowing so much and doing nothing. So because of that, that's why Ndovu comes with the tool where you can actually put in your money and start investing. So tool set is key, a budgeting template, standing instruction to automate investment, having an accountability partner. So they're key to help us to complete the cycle of personal finance pillars. So until you actually open the investment account and put in the money, there'll be no reward. So if there was a reward for knowing so much in financial markets, it would be the business journalists or people who have done accounting and finance who will be the billionaires. But what matters usually is who does the actual investment, and then they learn from that over time. So that is personal finance pillar, and I hope it gives you the ground or foundation to be able to build from strength to strength over time. So you see, you need all the pillars, you need the investment platform, you need to know what is in there and whether it would work for you or no. And then mindset is a personal journey. So you need to connect the three so that you can get started on your financial journey.
Thank you, Robert. And I guess one key thing that Robert says is, it's, you know, as Kenyans, we spend a lot of time learning about new concepts, different types of life skills, but until you don't put theory in practice, it's really difficult to learn. So I'm a big believer of always getting started very small, and then you can take that journey and see how you're progressing. And as you've learned everything, you're actually able to see how it really plays out in real life. So if you have any questions, we want to keep this very interactive. So do keep posting your questions in the chat, and we'll respond to them as and when. But here we really want to provide you an example of a case study of practitioners in the healthcare space. So Robert, over to you.
Yeah, so let's take a practical case study. And as medics, you have more information than us actually about your industry. So let's say there's Donald, who is a dentist, but Donald is practicing as a private dentist. So he has a clinic. So what happens? He's cleared campus and probably he has a help loan. So again, that's a liability from the point to go. So he needs to pay that loan over time. And also to set up that clinic, probably he's taken some loan from a commercial bank. So as he starts, he's already paying some loans and the money is coming in, the money is good and he's enjoying life. But what is happening is that when you look at his private practice, the value of the business really doesn't go up over time. So it's about him being there, spending his time there, having his staff. And as long as he's doing that, he's happy. But if Donald is not setting aside part of the income that he's getting from the practice, what happens is that he might have to work until he's age 60 or even 70. And I believe that you can relate to the such scenarios whereby there's no retirement fund that he set aside. So he's just working and he has to work to sustain himself. But had he started investing, which is why we are here, by just setting aside, let's say even 30,000 Kenya shillings per month or 50 in a circle or in an investment such as the Ndovu Healthcare Fund, it means that over time, he'll be having two parallel sources of income. So while he's at the clinic, his investments are also working for him. And that is the whole idea of investing, is to be able to have a replica of yourself. So the investment is like a part of you. So you are here working and that investment is working for you. So whether it is an investment in a health fund with the likes of Pfizer. So all those employees, when they're working, they're implicitly working for you and other shareholders. And that's why investing helps people to accelerate their journey towards wealth, towards retirement, and toward enjoying life. Because retirement age, again, is just a number that was set. Maybe we need to study the history of people came up with a certain number, but you might have aspirations of retiring at age 40 or being in a position where you really don't need to work at age 50. So those personal goals, if you have them, you need to have to separate your investment from your core business. So you get the income from the business. It can be a withdrawal at the end of the year, or it can be a monthly salary, but you should ensure that you put it somewhere. And like you said, you look at returns above inflation. So if you can do that consistently, the money grows, and investors, there are people who create momentum over time. You'll even see that they tend to pay less taxes over time because that money is just growing, and maybe the tax that is charged there is typically lower than the tax that is charged on income. So it's very, very important that if you're in private practice, you look at things that way. You don't want to be in a position whereby you are tied in your clinic at age 70, 75, because you didn't set up a retirement fund. You might not even be able to afford to build your own home if your family needs that. If the children need to go to school, you might not be in a position to do that. But cash flow is coming on a day-to-day basis. It's just that since you are not setting aside enough money, you are not able to get a lump sum that you need to do with most things in life. So we thought that it would be useful to give you a practical scenario.
Yeah, so just building upon the practical scenario that Robert's painted, most of us go to work, we earn some income, but we don't really have a financial plan. And the reason being is because, financial literacy, which is the skill set you need to actually come out of just earning a salary and becoming wealthy and achieving financial freedom, isn't taught at schools, not only in Kenya, but even in the UK. So I personally spent over 15 years in the UK advising clients on how to take the pot of money they have today, invest it and grow so they can achieve financial freedom. I worked at Deloitte and BlackRock, and I see this over and over again. So today we want to focus on what is a financial plan and how can you take away today some practical steps on creating your own financial plan. So simply put, a financial plan is an approach that helps you achieve your long-term and so short-term and long-term financial goals. Some short-term financial goals could be, paying for a vocational course that you would like to upskill your skill set with, going on holiday, perhaps buying a car is a short-term goal. And long-term goals are things like paying for your children's education, achieving financial freedom, as well as retirement. And these short-term and long-term goals are important because each of the goals have different characteristics in terms of time frame, how much money you need, and also when it comes to building your financial plan, understanding how much money you will need in a short period of time versus a long period of time to actually achieve the goal. So when it comes to financial planning, we have a rule of thumb. So as practitioners, let's take Donald as a case study. Every single month, Donald has a practice, and at his practice, he's generating a revenue of, let's say, 500,000 Kenya shillings. Now, of that revenue, once he's paid expenses, etc., he takes home 200,000 shillings. And the rule of thumb is that whatever your income is, this includes side hustles, contracting jobs that you might include, any other sources of income like a rental property, that should be seen as your overall income. So in this scenario, let's just assume Donald has that one set of income, which is 200,000 shillings every single month. By a rule of thumb, you should look to save 25% of your income. So immediately before you start spending, paying your rent, paying for utilities, you should pay yourself 25% of that, and it should move into a savings account. And the reason is that you're building discipline, and that's a very key element of when it comes to saving and investing, is to pay yourself first. And then of that 25% of your savings portfolio, a lot of people make the mistake of just thinking that because I'm saving, that means I have all the same characteristics and that's what I should focus on. But when it comes to your savings portfolio, you should look to break that down into 3 particular funds. So firstly is an emergency fund, and this fund essentially says what it does. It's in occasion, say somebody falls ill, you need to pay for hospital bills, you lose your job, and you need enough money to survive until you find the next opportunity. So an emergency fund is a fund that can cover 3 months of your expenses. And these are your basic expenses, nothing to do with, of course, if you lost your job or you're drawing upon your emergency fund for a healthcare emergency, you will try and not go out as much and eat mainly at home until you figure out your next best steps. So of that savings portfolio, 5% of that should be held in liquid investments. What I mean by liquid investments, it's something that you can draw upon quickly. So you can withdraw from your high savings account within a day. For example, a money market fund offered by local fund managers is a very interesting emergency fund allocation because it's low risk and your assets are not at risk. So Donald, in this example, will, from that 200K, put 5% towards his emergency fund. And if you don't have one today, nothing to worry about. You build that emergency fund over time. And the idea is that overall, your emergency fund should equal 5%. The second opportunity is the opportunistic fund. So opportunistic portfolio is a high-risk portfolio. So when it comes to investing, there's different types of risks that you can take. The assets or investments that fall under opportunistic is, for example, investing in crypto. The reason why it's opportunistic is because it's high risk and high gain. So for those of you, if you were invested in crypto today, if you had bought it 6 months ago, it was 50% higher than what it is today. So today, crypto portfolio is down by 50%. But the thing is, because it's high risk, it's a high risk play. Another example is buying individual shares. For example, individual shares such as company stocks known. So let's take Safaricom as an example. The reason they're seen as high risk is because you're putting all your eggs in one basket. So you as a healthcare professional is saying, I believe that I'm going to hold, in fact, let's change that example to Pfizer. I believe in Pfizer as a company, and I'm going to put all my savings in Pfizer. But the reality is that because you and I are retail investors, we don't have enough information to understand whether the share price of Pfizer is going to go up or down. Things that cause the share price of Pfizer to go up is if they announce that they've got a new license to distribute a new drug or a vaccine has been approved. That means the share price of that company will go up. But there will be scenarios where the share price of that company comes down because they've been fined for misuse of lab testing on particular animals, for example. And so as a normal everyday person who is super busy at their day-to-day job, when you invest in individuals, companies, you're actually putting a lot of your eggs in one basket. And equities is one of those high-risk allocations that go into your opportunistic portfolio, and that should make up 20% of your portfolio. And then lastly, what Dovu likes to focus on is long-term investing. This simply means that instead of investing in one individual company, the value here is to build long-term wealth by saving regularly on a monthly basis, but investing in a sector rather than an individual name. So the ethos at Dovu very much is that you would hold a healthcare sector fund over a 5, 6, 7, 10 years period, because you know that healthcare is a necessity and not a luxury, and you will continue to, or you people and the population globally will continue to need healthcare products as a long term, versus just going and holding a Pfizer stock or a AstraZeneca stock. So the idea here at Dovu is like, let's focus on your long-term portfolio, because you're not buying one company, but you're buying the healthcare company that contains all the other healthcare companies, including Johnson & Johnson and the likes. You're actually bringing down your risk because you're saying, I believe in a sector that is going to continue to do well versus one individual company. Another example of a sector would be the technology sector. That's going to be an industry that's continuously disrupted. These companies are going to see a high increase in adoption. And that's a sector that we can carefully say that is going to be around for 10 to 15 years. So that's really the focus at Dovu. Again, there's nothing wrong with holding individual stocks, crypto, but you need to understand the risks of it before you do it. Just we speak to a lot of underlying users who tell us that they have 100% of their holdings in a crypto fund and well, Bitcoin, for example. We think that's super risky, and you should always split out your investments across different portfolios, as all three of these portfolios have different use cases. So 5% in your emergency fund, which is your 3-month runway. An opportunistic fund could be investing, even investing in a friend's business because they need some support. But the key focus here is long-term portfolio, and you should do that only investing through funds. And these funds vary from equity funds, bond funds to cash funds. And we'll give you some examples shortly. So why isn't savings enough? Robert touched upon this briefly. There's this concept called inflation. Recently, the National Statistics Bureau's quoted inflation in Kenya to be 7.4%. That simply means that if we had 1,000 bob today, it will probably buy us 5 bananas. But because of this concept of inflation, next year it'll only buy us 3 bananas. So the actual value that you have today is losing money. And so saving it in a bank account is not a good idea. You have to do more with it. You have to invest. So if I give you just a basic example, today in a normal savings account with your bank, you're earning an interest rate of 3.5%. And if inflation today is 7%, your 1,000 bob is losing value. And so the idea is that let's invest in opportunities that are safe, responsible, that will generate more than 7% return, so that you can make sure that the money you worked hard for every single day is actually working hard for you now because you're investing it. So one of the key concepts when it comes to investing is time. Time is this beautiful concept when it comes to investing, and it works in your favor because I'll take an example. Let's say Donald here wants to retire at the age of 65. He's working so hard, and he knows that when he retires at the age of 65, he'd like to have 10 million shillings for his retirement. So Donald, seeks out Abojani, seeks out Dovu, realizes, okay, I'm 35. In order for me to get to 10 million shillings at the point that I retire at the 65, I only have to invest 12,000 bob every single year. I should say 100 million shillings, not 10 million shillings. Versus if he had started at the age of 55, he would need a lot more money every single month. He would need 130,000 shillings every single month. And so the idea here is that if you start early, the money that you have invested at an early age earns interest, and that interest earns interest, and that interest earns interest. So that concept of earning interest is known as the compounding effect. So our advice always is, whether it's 5,000 shillings, 10,000 shillings, 15,000 shillings, the idea when it comes to investing is that you should start early, because it's almost like you're leaving free money on the table. Versus if you held that 12,000 shillings in a bank account, every single month you would be losing value. So the idea here is very much, let's get started early, even if it's small amounts. As you progress in your careers and you become smarter with the way you spend money, you're able to invest more over time. Robert, over to you.
Thank you, Radhika. Yeah, so just to expand on what Radhika has talked about in terms of goal setting, it's very, very important that you look at your life and see what is it that you want to do in a few years to come, or in the next 3 months, so that you can be able to prioritize. So the key thing is to first write down your goals. They might be 3, 6, or 10, and then group them into short-term and long-term goals. Then after doing that, you should now be able to allocate your income and allocate baskets for those goals. So you could say you want a dream house, and again, for that dream house, how do you want to own it? Do you want to buy a piece of land and you build later on, or do you want to take a mortgage? Whatever you want to do is very important that you set yourself in a way such that you're likely to succeed. So over time, there's usually, for example, something known as home ownership bug. So I can say something that tends to happen to people at a certain age. So mostly age 35 to 50, and people make a lot of bad decisions. So because of that, it's very important that such long-term goals, you plan very well for them in advance. Retirement, again, like you said, when we are young, we have what we call human capital. But over time, the human capital will be low. So we need financial capital to take care of us. So we need to make a connection with that concept first, even the concept of home ownership, because there are people who still feel like they need to rent. But you never know, maybe if you plan to have a family, to reach a point in time where you actually need a home. Because of that, you need to plan for that. And sometimes you might need a certain type of car that you might not be able to afford to buy now. So you want to buy it 3 years from now, 5 or 6. You start planning for it. And it's very important to have relatable goals. So you can even name them in a name that in terms that you understand, like kids education, that's a connection. So you want the best for your kids, you want them to go to the best schools, and this is how much you approximate that is going to cost you. So it's important to take note that over time, the price for school or education, private mostly, is likely to go up. When I was in campus, I don't remember well, but I think we were paying 2,800 for the whole semester for a hostel. But recently I saw a friend's child there in one of the Kwetu hostels, and I think they're paying around 12,000 per month. So looking back at what we are paying, I could not be able to process that. But basically that tells you that, again, in that sector, the prices are likely to go up over time. So when you're planning again, you have to be a little bit more aggressive. So look at the current prices and just know that over time, they're likely to go up, then plan for that. Then how do you implement your plan? So it's important that for your plan, you pick a goal and then you see how much you can save for it. So that's where you have the concept of money buckets. So a money bucket is basically money that you've tied down for a specific goal, and that gives you the momentum to go till the end. So it's very, very important, because again, if you don't have clarity, you might be jumping into the trending things or the new things that are coming up, and you might lose sight of your goals. So you can just look at your own career or even business. It takes a lot of time to actually graduate and start practicing. The same for a business. So the same goes for investing. So you pick that goal and just go with it till the end. So for investments, you need a platform that is regulated, a platform that is intuitive, easy to use, because the funny thing about investing is that since no one is watching us, no one is holding us accountable, not like at work where you have the boss to follow up on things, or in business where the customers want results. So it's very easy for us to be lazy when it comes to investment. So because of that, you want a platform that is quite easy to use. So it's very, very important to use a platform such as Ndovu and see the investments options that are available for you there. Then out of those products, you don't have to invest in all the products. Like we said in the mindset, look at what you want, then you go to the financial services industry, look at the products that will help you achieve those goals. Is it retirement? Is it growing your income? Whatever you need, you should match it to the financial instruments that are available and make it regular. So it's about being consistent. So it is a game where things become a little bit more easier if you are consistent. So you find that if you can set aside 50,000 Kenya shillings at the beginning of the year, at the end of the year, you'll have 600,000. Very, very coherent way of doing things. So you can actually see that by year 2, if you add interest, it will be over 1.2 M, like that. If you are setting aside 20,000 Kenya shillings per month, you know that at the end of the year, you have 240,000. At the end of year 2 plus interest, you'll have 480 and above. So that is the key. So if you can have standing instruction, that would be useful. And put calendars. So you can even put a reminder that reminds you every 28th that money is coming home. So you'll remember to just do the necessary. Yeah, so plan B is important. So the way we look at personal finance, we look at it as a value chain where we relate stuff. So you have to look at your career first, or entrepreneurship, and grow it. So how do you grow your career? Since you are in that field, you have the know-how. Do you need a master's? I see a lot of medics, they have to do masters. So if that is your industry, it also means that you need to invest in that. So invest in that, because if you do that, you'll become more valuable in your industry and you are likely to earn more. So that is key. and as you grow that, you'll be able to have more disposable income. Then you look at other aspects of life. So for example, life insurance is key, and it would help you and your lineage in case of an emergency. And these days we even have life insurance products with endowment, which basically means that they can expire they can mature at a certain point in time and you can get your money back. And also in case something happens, it can help the family. So that is key. And that's where you look at finance for kids, taking care of a family, and even our dependents. And estate administration and succession planning. So this one, I want to really emphasize on it. So the key thing, the type of success that we should even make more popular is the success of your lineage. The success of your lineage. So if you are Robert, if you are Donald, how do you want the Donald Bees to be like? So that lineage is important. Do you want them to have some disposable income so that when they finish school, they have options? They can be entrepreneurs instead of just looking for jobs. So the best way to explain it is like this. If you are to move from Nairobi to Thika, you're able to do that because someone built a bridge in Ngara. So what bridge are you building for? Your lineage. Currently, if you look at the Unclaimed Asset Authority, Financial Assets Authority, about 50 billion is there and only 1 billion has been claimed. So that shows that we are not very good when it comes to estate administration and succession planning. So we should create our wealth so that we're able to transition it to the next generation. And it's not only financial wealth, even the intangible wealth. Maybe you've gone outside the country, you went to South Africa, the skills that you've learned, you know how to write a CV, and there are family members who are jobless. So how can you help them so that as a family you grow together? Because wealth works at interdependence layer. So you can't be the only wealthy person in your lineage. You need more people so that you can move together, whether it is investments, whether it is just doing family stuff and enjoying the life that you desire as a family. So that is key. So writing a will, those are concepts that we really need to get into and learn over time. And the good thing is that there's a lot of information and support if you plan to achieve the same.
Yeah, and just a quick tip there as well. If you go onto the internet, just Google how to write a will. There's a lot of information there that you can just leverage. And then once you've written it, you just get someone to certify it. And certification nowadays doesn't cost much. It costs like, so depending on obviously the lawyer, either 1,000 bob to 5,000 shillings, which if you are at the age of 40 plus, I would really recommend writing a will so that your loved ones are looked after. So just a slight introduction to Dovu. So again, like I mentioned earlier, the vision for Dovu was to provide every African, regardless of income level and knowledge, the right tools to grow your wealth. And the way we encourage that is by investing in a smart way, by taking gradual risks, but making sure your capital is preserved. So the money that you put in is not at risk and you're growing it slowly over time. So we don't promise any get rich quick schemes. If it's too good to be true, honestly, it is. And with everything in life, it takes hard work. So if you want to be successful at your skill, you have to put in the work. Same with investing. So when people are like, I have earned 30% return on an increase in shares and stocks or any type of business, it's too good to be true. I would recommend just building your wealth slowly over time. So the way we've designed the solution is to make sure that we cater to individuals who know nothing about investing. And this is known as goal-based investing. What you would do is when you sign up on Dovu, you actually get asked a series of questions. These questions, as you answer them, help us understand a little bit more about you as a user. And at the end of it, we tell you what type of investor you are. So you may think that you're a risk-seeking individual, but your lifestyle is telling you that you're a balanced investor. And then as we profile you and tell you, okay, you're a conservative, balanced, and aggressive investor, you can say to us, okay, I prefer to just tell you that I have a house goal. I'd like to build a house in 7 years' time, and right now I have 100,000 shillings saved. I know it's going to cost me 12 million shillings in order to get a house. How much do I need to put away every single month? And investing, how can I get that quickly? So if you sign up, you can actually play around with the tool, and you can see, okay, maybe I need to put in an additional 10,000 shillings every month to get to my goal quicker by a year. Or actually, I'm not hitting where I want to get, but if I just make sure I go through my financial spending every single month and save even an additional 5,000 shillings, I get to my goal a lot quicker. So I really recommend, if you're new to investing, you should actually look at goal-based investing, because we have a really neat tool that lets you calculate and better understand how much you should be saving on a monthly basis in order to get to your goal within the time frame that you're looking at. The other option here is very much for individuals who would like to take a little bit more control on their investments. And the way we've designed the solution was very much to encourage you to invest in sectors rather than individual stocks. And so we do that via funds. And one fund that we have is a cash fund. It's a money market fund. It says what it does on the tin. It's super secure, and it generates a return of 10% on an annual basis. We have also previously offered the infrastructure bond that is also a guaranteed product. It's offered by the government of Kenya, and it promises to pay you anywhere between 12.5 to 13.7% on your money, allowing you to make sure you get that as an income on a regular basis. And this is actually where the healthcare fund falls into. So we have different sectors such as the Wall Street, which is a financial fund. It holds big companies like Deloitte, BlackRock, JP Morgan, Goldman Sachs, Standard Chartered, and the likes. We have obviously the healthcare fund, which I'll talk about in a bit more detail. We also have the global index, which is basically an index that has exposure to all the largest 500 companies. And historically, that's generated anywhere between 14 to 16% on the US dollar. So, that's a really interesting return that you should be looking out for. And so I'd let you, once you sign up, actually go through the platform to see what type of products are available. So the reason why we would recommend using Dobu, first of all, we give you access to global markets, which was previously not able to do. We're very competitive when it comes to fees. One thing when setting up the business, we realized the cost of business or doing business in Kenya is really high. So we've navigated and put it together so that our fees are competitive. I mentioned when you come onto the platform, we ask you a series of questions. You're getting free digital advice. The backend has been designed with years of investment experience. So collectively, we have 36 years of investment experience. We've put that together to be able for you to just determine what type of investor you are. I would do this exercise, even if you're not ready to invest today. You should go onto the platform and try and understand, okay, based on my lifestyle, what type of risk should I take? And that response you get should also flow into your daily spending. It's not so much the large expenses that make a difference, because of course, if we're going to spend 50,000 shillings, we're going to think 3 times about it. But as a female, for example, if I spend 3,500 on my nails every 2 weeks, how can I make sure to stretch my nails instead of doing it every 2 weeks, every 3 weeks, and save the 3,000 and save and invest the 3,500? That really, really goes a long way. So once you start understanding how much money do I need on a monthly basis to achieve my goal of retirement or get to my goal of buying a house, how much more can I save? Really looking through your expenses, that is really the value that we want you to take away. So it filters through your day-to-day lifestyle. And the last thing is, we're all regulated by the Capital Markets Authority. So the idea is that we keep our clients' money safe at all times. Again, the way we do that is by also hand selecting certain fund managers to work with. We don't work with everyone because sometimes they don't say they're not doing what they say on the tin, and that's really important to us. So just introducing the healthcare fund. So going back to the example of Donald. Donald is a young, aspiring dental practitioner. He has worked really hard for his money. He's balancing his books when it comes to inflow. He's going out there and generating sales. But all of a sudden, the pandemic hits and everything is shut down for nearly 3 to 4 months. Dental practices are not operating, and he has all this money saved up, and he's now using his savings to actually support him and his family. But had he invested some of that money, he could have drawn upon the income that is generated off the fund. And really today, what we want to focus on is, how do you take the knowledge that you have about your sector and invest in a fund that allows you to achieve growth or an additional stream of income? So the healthcare fund will definitely invest in companies that you've heard of. Here's just an example of some of them. So Abbott is a company that you can find on Mombasa Road. Johnson & Johnson, we continuously use the products from a cosmetic perspective, but also for our babies when you're washing them. So anything you can think of is Johnson & Johnson is definitely a company that we're constantly buying. So the share price will constantly go up. Pfizer, we actually used Pfizer vaccines in Kenya. They were rolled out here. Again, they've done a lot of innovation and growth around ensuring that they're constantly innovating. And so it's a good company to hold. And there's a whole bunch of other names in this fund. So as healthcare practitioners, you know the value that you're buying into. Now, if we look at the healthcare fund as a sector, we know that this is not a luxury. So healthcare, especially with the pandemic, has proven that everyone is a consumer of healthcare. If we look at the average age across globally, that comes to about 40 years. And in Kenya, it is low because we have a much lower population. But if you look at areas like Monaco, the average age is 56. Now, we all know, and in fact, you know better than me, within the healthcare industry, all of us have consumed healthcare products within the last year. We've either had a flu, we've consumed Panadol, we might be have tummy problems, we've had Gaviscon. It is something that we cannot do without. So it's definitely a sector that we can be comfortable about to say, okay, if I invested my 10,000 shillings today, I know that this sector will continue to grow. And so this is how the healthcare fund has performed previously. So last year, if you had invested your money at 10,000 shillings in year one, that would have grown by 15%. And when it comes to looking at how funds have performed historically, you want to look at the longer term. So like, how has the fund done over 5 years? How has the fund done over 10 years? And what this simply means is that if Donald 10 years ago had taken 50,000 shillings and invested in the healthcare fund, every single year, his money would have grown by 15%. And if you compare it to inflation or the money that you're earning in a bank, 15% in USD dollar is definitely outperforming the 4.5% you would have got in your bank account and outpacing inflation at 7% today. So your money that you worked hard for, by simply investing it in an industry that you understand, is generating you more income. So should there be a financial shock like a pandemic, you're not drawing upon your savings, you're actually using the money that has generated interest to actually pay off or continue sustaining your lifestyle. And I think this chart is super interesting. So what if Donald, yourselves, myself had put away $10,000 in the healthcare fund 10 years ago? You would have earned, your fund would have been around, your money that you would have been around $70,000. There is no matter how hard you worked, there is no investment or hard work that you would have done that would have allowed you to save $60,000 over a 10-year period. So the idea, especially with inflation, especially with the cost of living going up for sure, there is no way you could have done it. So the importance of investing is that you've worked hard for your money, you put it into a secure fund. And of course, investment comes at a risk, but when you buy a fund versus an individual stock, you're making an informed decision about a sector, about long-term investing versus I thinking Apple is going to continuously be around for a really long time. Right, brilliant. So now the floor is open to Q&A, just keeping mindful of time. We have about 10 minutes. I know it's an evening session, so everybody also has their families and dinner to get to. So I would like you to just put some questions in the chat and we'll answer them as they come along. Anything to do with investments, anything to do with the financial plan, how to create it, anything to do with the healthcare fund. In the meantime, I'll let Robert say a few things about why he thinks certain sectors as healthcare, financials, technology will continue to grow, and the thinking behind global consumption and how that's increasing over time.
Thank you very much, Radhika. So I would say the best way to look at the investment options is to look at a personal budget or a family budget. So you'll see that people tend to spend a lot of money in certain sectors. So like healthcare, most likely each and every household will be spending money in it. So what happens in that case, we say that it has a very big addressable market. And that's something that affects young people, old people, people across all age groups. So it's a very robust market. And given your understanding in that sector, again, you know that if we come up with an innovation in that sector, you can hold the patent for 20 years. So that means that as a healthcare company, whether you are Pfizer and the rest, you are likely to rake in the profits for a very long period of time. So there's sort of some guaranteed good income for you over time. So for every research that you do, maybe 3 or 1 out of 10 would work, but the one that works would be great for the company. So when it comes to investing, I would say that it's just important to tag along your industry. So obviously you look at the global trends and see the strength in, let's say, healthcare sector. Then if you're a practitioner, you already have insights in the sector and you are being given a basket of healthcare companies. So you're just tagging along and saying that, yes, I'm in this sector. I can't work in all the hospitals in Kenya or all the medical companies, but I'll benefit from the hard work of other medics globally. So that's basically how you tag along and you become part of that sector which you already have insights with. So it's actually one of the best strategies for investing since you have industry knowledge.
Brilliant, thanks, Robert. So there's a question here of what is the minimum amount needed to invest in the healthcare fund? So you can get started as little as 5,000 shillings. So yeah, it's 5,000 shillings and then anything above that. The next question from Derek is that how can you invest in the infrastructure, not in the healthcare fund? So we did some work on the infrastructure. So I'm just going to share a demo account with everybody here just to walk you through the product. So this is obviously if you sign up, there's a web solution. We also have apps. I personally prefer the web solution, but everyone has different preferences. We have an Android app and an Apple app. So this is just a demo account. I'm dialing in, and this is essentially your dashboard. Before this, there's a whole when you sign up, there's a whole profiling sequence that asks you 6 questions. And in fact, let me just quickly show you what the type of investor you can be. After okay, so these are the questions that come up. How old are you? How much are you earning? All this information is confidential. What happens? Are you new to investments? What happens if the market is sold off? What would you do? Are you saving for a long-term goal? And once you answer all of that, we profile you. So we'll say, okay, so my demo account profile was that I'm an adventurous investor. All that means is that I'm looking to grow my money. I'm willing to accept some ups and downs in exchange of receiving higher returns over time. And there are 3 different types of investors. And so if you wanted to invest in the healthcare fund, you would go under the general investing, and here's the healthcare fund. So in this healthcare fund, we tell you, right, it's a USD denominated fund and the level of risk is cautious. And we tell you what it is all about. So there's a short summary on the type of sector this is. And we also show you the types of logos, companies here that you'd be investing in and how it's performed over time. And this is the underlying fund manager. So BlackRock is one of the largest asset managers. We have worked with a lot of US fund managers with the strong ones in the name. And if you wanted to learn more, you could click on the fact sheet. And this is if you're a nerd and you want to do your due diligence. Yeah, it's all linked and updated. And there's some really interesting information here. So the top 10 holdings and things like that. There must be all names that you all recognize because you probably use their products quite regularly. But on a high level, that's exactly how you could access the healthcare fund. Now, for example, we have a dashboard here as well. We tell you how there's a Adobe Learning Academy as well. And this is, yeah, how you're doing. And of course, lastly, just to show you a quick goal. So let's say I'm saving from a house. This is a great tool that I want to save in Kenya shillings. I want about 12 million. And right now I've got 200,000 shillings saved up. And I can comfortably save maybe 60,000 shillings a month, just an example. But I want to buy the house in 6 years' time. Do I get to 12 million shillings? No, I don't. But what does that mean for me? Does it mean I need an additional year? Does it mean I can save maybe an additional 5,000 shillings? It really gives you an insight on how should I be thinking about investments. Do I want to change the risk? So I'm adventurous, so we'd invest on your risk, on your adventurous profile. But as you want to move, maybe take less risk, you go to balance, you see how that changes. And then as a result of that, we'll say, okay, from this, if you were to continue to invest over a 7-year period, now keeping in mind, today you can invest 65,000 shillings, but as you grow and you earn more, you can put more towards your goal. But it's all about giving you high level, nothing is fixed here. It's about getting you to a comfortable financial goal. And you could get to 10 million shillings roughly in that period of time, and we do all the heavy lifting for you. So it's very much for people who don't know how to get started or don't know how to invest. But even if you're a profound investor, I'd recommend doing a few goals for yourself, really asking how much will my kids' education cost me? How much do I need to be putting away? So it gives you a plan to work towards. And again, let's say your son says or daughter says, actually, mom and dad, thank you so much for saving for me, but I decided I'm going to be a comedian and I don't need to go to university for that. Guess what? As parents, you now have $200,000 that you were saving towards as something that you can use for your retirement. And the whole idea here is very much, let's get started with your investments. And either way, it's your plan and it can change as you wish. The next question is, let me share your website. So I will just put that in the chat to everybody. Sorry. Here we go. The next question is, are you paid interest every year or at the end of the period? So interest is not, so the interest is your returns are not crystallized until you withdraw. But it's reflected daily. So Kenneth, if you had put in 50,000 shillings and the healthcare fund every day is moving in price, you'll see the value of your investment go up and down. So at the end of the year, what the fund has previously done is about 15%, and then you can withdraw your money at any point, essentially. The next question is, I will look at Dovu website, but what product fits a 70,000 salary or even below? To be honest, Amos, I think you could just get started with 5,000 shillings in the goal, or you can also just get started in 5,000 shillings in the investment fund. Learn about it, put your money in, see how it performs over a 3-month period, and try and build your savings as you go along. And as you see value in it, you'll definitely come and put back more money into it because you'll see your money grow. Mohammed is asking, what are the fees? So we have fees of 1%. So if you were to invest 1,000 shillings, your fee would be 1 bob. And it's significantly competitive in the market. The next question is asked, do you welcome investors that are not based in Kenya? The only investors that we can't take at the moment are US citizens, but other than that, we have people from Uganda, Tanzania, Rwanda, UK, Indonesia, and a whole wide of other regions that actually use our platform. Okay, so Esther asks a really interesting question here. She's saying, what are the calculations that have been factored in a goal based? So I'll just go back. So there are 3 types of profiles. If you're a conservative investor, you can earn anywhere between 8 to 10% in terms of your goals. It can be higher, but we're using a baseline. If you're a balanced investor, you can earn anywhere between 12 to 14%. And if you're aggressive, it's 15 and above. So if I just show you some of the other funds here, so healthcare, of course, has returned 15% every single year. The blue chip fund, which is again a fund that contains or gives you exposure to 500 companies in the index. You'll see here that over a 3-year period, or if you take the average, it's actually performed 16% over 5 years, which is not bad and it's in USD. So just remember, when you're earning in USD, it's a lot higher than earning in Kenya shillings. So your local, let's say a money market fund will give you 10%, but that's on Kenya shilling. It is not equivalent to the 10% you would earn on a US investment because of the currency exchange as well. Okay, let me just come back. There is one other question. Do you cater for short-term investments? Yes. So we don't have any lockup period of when you should invest, because ultimately, you know, we understand that things can go wrong and you might need to draw upon your investment. But what we do encourage is investing regularly on a monthly basis, so you can build up your portfolio over time. So we don't put a lockup because we understand financial things can happen. But the idea is really to build on your money. And also, KK, if you were to create a short-term goal, that's something that you can focus on, and you could take that out within a year. So there's another question here. What are the options for sending investments to the platform? So great question. So I'll just show you. So let's just say I wanted to invest in blue chip. I would click on top up. And I would say, okay, I'm going to invest $100 in the fund. So if I'm doing dollars, the best one I would recommend is bank transfer. The reason being is because it's pretty much free. We're very transparent on how much we charge you. So I was giving you the example of what our fees are. So if you were invested $100, our fees is $1,000. And when you went to pay now, you would simply enter these bank account details with your reference number here on your platform, on your online banking platform. So you would log on, put these bank details and put your reference number and say, okay, I've transferred the money here. Now, the reason why I would recommend bank transfer is because it's the cheapest form. If you were to use a credit card or international card, it actually costs you 3.8% to transfer the money. So we have it as an option because we have international investors. But if you're local, I would add international. I still would recommend bank transfer. And if I just go back and I invest in Kenya shillings, let's just say in the healthcare fund. So I'm going to invest 550 Kenya shillings. You also have the option of paying with M-Pesa, and we also tell you what how much it would cost you, and likewise you could do with bank transfer. Soon we'll be adding Airtel Money as well to the platform, but those are the payment options. Okay. How does the withdrawal take, and how many days, does the withdrawal take? Great question. So we allow ourselves 3 working days in order to place your trade, as well as 3 working days to withdraw your money. So on average, your money will hit your bank account in 2 working days so far is what we've seen as a withdrawal. It's in line with industry standards. Even if you invested in a money market fund locally, that's the case. And the reason we give an additional day, just in case there's some delay on your side from a bank end, or systems are down, it just gives us another day. But essentially within 3 working days, we guarantee your money would be back in your account. So KK is asking, are these investment USD or Kenya shillings? Great question. They are mixed. So if I just show you here, so here you'll see that, so if you click into the fund, you'll see that they're USD, but we also have local Kenya shillings. We also have the infrastructure bond, which is Kenya shillings. We have, so Salama is a money market fund, which is denominated in Kenya shillings. So it's a wide range of investments. So great question. So the question is, are standing orders available from my bank to your platform? So we're working on creating a standing order that can be set up automatically from our platform, but right now there's no process of such. In the West and everywhere else, you can simply do a direct debit, which we set up from our side, but to date there isn't that functionality available in the market. We've looked and looked. So if you do know any company doing that, please let us know. We're quite keen to add that. But at this stage, if you wanted to invest on a regular basis, you would have to come onto your platform, make the top up, and then you would you'd have to do the whole process altogether. So yeah, unfortunately at the moment we don't have it, but we're working on it. Okay. Another great, so there's no further questions, and I'm just looking at the time. We've run over slightly. What I would really appreciate, look, we're a company that's looking to make sure we're providing a service that is needed. So we would love to have any constructive feedback. You can either just tweet at me the constructive feedback, or you can just write to support@ndovu.co, and we will we will take on your feedback and improve the product. So there's one last question here. What is the difference with the other money market funds? Okay, so from an investment perspective, money market funds, all of them, whether it's a Zimele, Sanlam, Apollo, Britam, all do the same thing in a nutshell. You know, they take your money and the idea is you hold it for a long term, and it generates money by investing in cash-like instruments. So this is like government bonds, treasury bonds, fixed deposits. The key thing about when it comes to selecting a money market fund is understanding, A, what are the fees that are being charged? Because the investment process is very similar, what is the fee that you're being charged? What fee are you being charged, right? So you want to make sure you're not overpaying for a simple high rate savings account because you're with a particular fund manager. The second thing is I'd look at the institute offering the fund manager, the money market fund, sorry. So, you know, some institutes are very well known. I would go with somebody that has good governance. And that's super important because you want to make sure your money is safe at all times. What other social media platforms are you on? I'm going to ask Alex just to put a few links here. Please follow Abojani on Telegram. They have really great content that lets you increase your level of knowledge on a regular basis. And we're on LinkedIn, Twitter. So the tag is Ndovu Tech. Here you go. On LinkedIn, Twitter, and Instagram, sorry, and Facebook, of course. So if you follow us, we do try and put a lot of educational content. We also recently signed a partnership with Sauti Sol, and the reason being is because they work with a lot of youth to educate them on, so they looked up by a lot of youth. So we're working with them to create educational content to help educate our, you know, young population that's coming into the workforce, because it's something that we see as our CSR, something that we feel responsible of doing. What is the percentage withholding tax on interest? It's 15%, but the beauty of investing in these funds is that your return is paid net of fees and net of tax. So actually, if you invested in the healthcare fund 1,000 bob and your 1,000 bob has gone up to 1,015 bob, whatever you get paid and seen is net of tax and net of fees. So you don't actually need to pay anything. So that's a really handy and unique way of these funds, the way they've been designed. Okay. Okay, great. Again, thank you so much for listening to us and giving us your evening. I know everyone is super important, super busy, and your time is important. Apologies. Robert, any closing remarks?
So I would just like to encourage everyone that have joined the session today to understand that at the end of the day, what matters is what you do. So it's important that you start investing and do it consistently. And also you have to invest in instruments that are compatible with your lifestyle. So we know very well that entrepreneurs and professionals, you are people who are busy. So you are basically time poor. And you basically want investments that would work for you in the long run, since you don't have time to sit on a computer screen to look at how prices are moving. So it's important that you also align with that and look at long-term investments. So wish you very well. So follow Abojani, follow Ndovu, and we'll keep interacting, since investing is all about conversations and growing, and we hope to grow together. Thank you, Ndovu, and thank you everyone for attending. Radhika, you're on mute.
Thank you, Robert. I was just going to say thank you again, and we hope you are able to start on your investment journey and you found this session useful. Have a lovely evening, everyone. Thank you so much.